Welcome to Taking Stock for the week ending the 1st of April 2022. We're joining me today is our Managing Director and Chief Investment Officer, Tim Lincoln, to stream to you all things share market. Thanks for joining, Tim.
Yeah, my pleasure, Kien. Great to be here as always, especially following a terrific month that March was for equity markets and investors. So always a really positive thing there, Kien, and I hope all of our members and their families are well and safe wherever they reside around the country during these crazy times. But as I just said, the month of March has been exceptional for equities, with the All Ordinaries up circa 7% for the month. And who would have thought, with all of the macroeconomic and geopolitical influences out there at the moment, just incredible. Just goes to show, though, Kien, the importance of blocking out the noise and focusing on the long term, especially a 5-year plus period, and of course the management of a high quality portfolio of at least 15 stocks. The market rise and Stock Doctor's stellar performance and Star Stock's performance were primarily driven by a recovery in energy stocks, material and bank stocks. Some notable Star Stock performers that produced in excess of double-digit returns for the month were Commonwealth Bank, Macquarie Bank, the NAB, BHP, IGO, Grange Resources, Metalex, and a couple of tech names, including Objective Corp and Hansen. So you can see by the tables here that, the month of March was terrific, especially for Star Growth. The Star Income stocks underperformed a little bit for the month, but that was probably more because the miners and a few of the other companies we just mentioned had a stellar run. So they just dragged down a little bit, but we can't complain about a 5% return in a more defensive style portfolio. But as I said before, it's more about that longer term. And even with everything that's going on, those figures just look exceptional if we're prepared to again, block out the noise and focus on the long term, Kien.
Yeah, that's right, Tim. And also last week, one of our members, he raised concerns about us having too much resources exposure in our Star portfolios. And even though our Star portfolio has a combined 24% weight to materials and energy, we are comfortable holding this amount because the current inflationary environment and high commodity prices is supporting the profitability and cash flows of the miners and energy companies as well. Meanwhile, you have the urgency of cash-strapped property developers in China. They are rushing to complete projects and sell these apartments, and that's also supporting the commodity prices. Hence, during the week, we reinstated 2 high-quality Star Income stocks into our borderline Star Growth stock universe, BHP and Rio Tinto. But as highlighted at the end of last week's video, we continue to monitor resource stocks closely because once the cycle turns, it often happens quickly. And in the meantime, our team is continuing to research and look for forward-looking factors such as earnings revisions to help improve our resources model, Tim. So constantly innovating.
Yeah, fantastic stuff, Kien, and more positivity. In the second half of March, we noticed a recovery in growth stocks, especially amongst the high quality names, including Pinnacle Investment, Pro Medicus, Macquarie Group, Altium, and Netwealth. The recovery across these stocks substantiates what we've been telling investors over the last few months, that volatility truly does create opportunity, especially when markets have been skittish in response to the macroeconomic factors such as inflation and, of course, the Russia-Ukraine conflict. But I want to remind members that volatility is part of investing in the share market. It is very, very normal. However, psychologically, especially for newer share market participants and investors, volatility can cause havoc, with doubt and fear emerging at the forefront of their minds. These emotions will make it challenging to invest rationally. We begin to adopt a trading mentality if we're spooked by volatility, and therefore we start selling stocks out of fear and adapting our strategy to suit the environment. So incredibly reactive, only to then lock in losses if we make those irrational decisions. Hence, it's important to stay disciplined to your objective and have strong risk management processes in place. And Stock Doctor provides that rigor all at your fingertips. And therefore, we should hold a portfolio of at least 15 stocks, as I mentioned a little while ago in the opening, and look for financially healthy businesses to mitigate any insolvency risk. And there could be a few companies that go broke now that stimulus and etc. has ended. Invest according to your stage of life and your personal wealth. For those that are lower net wealth, then they need to be more careful with their asset allocation and the way they invest. Where the high net worth individuals, well, they can really just absolutely go for it, maybe growth orientated all the way through retirement. So that significant market corrections will not impact your lifestyle. So it's really, really important to be aware of your tolerances relative to your net wealth and stage of life. Have a long-term time frame, again, at least 5 years plus, in order to ride through varying economic cycles and take advantage of volatility and look for oversold quality opportunities. And over time, as history has shown, the market will recover as it did last month. This can be seen on the charts on screen, which compare star growth stocks and star income stocks to the All Ordinaries Accumulation Index and highlights the history of market events that have led to fear and doubt. But over time, we can see that Stock Doctor's star growth stocks and star income stocks have not only recovered from bouts of volatility, but have had significantly outperformed the market. So it is about that long term, staying exposed to quality, blocking out the noise, taking advantage of opportunity, and just staying the course. Critically important. Okay, Kien, with all of that now said and done and a reinforcement of our key messaging, sorry to sound like a broken record, but it's always important, especially during these times, to reinforce what we believe are philosophically incredibly important to our members and investors. But with all that said and done, Kien, let's now turn our attention to some star stock highlights during the week. And earlier this week, Kien, I noticed that the research team removed from our star stock universe gold miner Gold Road Resources. And this was due to a 54% decline in its earnings and subsequent compression in its return on invested capital from 27% to 14%. So what was the reason for the steep declines, Kien?
Yes, Tim, you would think that investing in gold companies during an inflationary environment is ideal, but we invest in the fundamentals, Tim, and also the numbers. And the deterioration in those numbers can be attributed to the lower gold production, also higher production costs, and also the softer gold sale prices as well.
Yeah, it's really interesting to see that even though management has reaffirmed FY22 production volumes will be 30% higher than last year, there have been downgrades of about 12% to its earnings outlook in the previous 3 months, Kien.
Yes, Tim, it's all about expectations, and the downgrades came because the result was below market expectations with the lower gold production. However, we may revisit the stock following its financial year 22 result if the recovery in the earnings growth expectations for this year are to be realised. But also, last week we did include Australia's largest tin producer, Metals X Limited, as a star growth stock. And for those who are not familiar with this commodity, tin, it's traditionally used in electronic manufacturing as a non-toxic solder. And also it tracks closely to semiconductor demand. Though the uses of tin may also be expanding towards the electrification of vehicles, and the commodity is poised as a promising alternative to graphite for use in the next generation of lithium-ion batteries, Tim.
Yeah, it's a really interesting story, isn't it? They're evolving relative to future demands and future technology, which is we love to see that innovation and an evolutionary element to all of our growth stocks. Wonderful stuff. But they're a really good case study too, Kien, because you and your research team must have a lot of conviction in the business because I noticed that there's no consensus forecasts under Golden Rule 3. When that's the case, you've got to do a big qualitative check, don't you, to make sure that you're confident in the business's future. So, with that lack of visibility, how can our investors and members determine whether earnings growth and outlook is actually positive, Kien?
You know, when you have limited or no analyst coverage, it often means that, you know, you could be finding a hidden gem. because a lot of those brokers aren't finding these companies. So that is to your benefit. But in situations like this, investors should refer to the company guidance, which is also articulated in the strategic comment, Tim. Management did allude to a 12% lift in production guidance for this year, and to date, Metals X has already achieved 55% of this guidance, which does suggest that the company will likely beat management expectations if the current run rate continues.
Yeah, it is. It's a great case study because obviously you had to read the annual reports or contact management to understand what their guidance was. So it's great that they have provided some level of guidance to give us further comfort. But Kien, I know there's been other companies in the past where they don't have analyst coverage or external analyst coverage, therefore no consensus, and management may not provide guidance. What do we do if that's the case?
Yeah, in those scenarios, it's the analyst's job, to talk to other analysts, the industry experts, to talk to management, as you said, Tim, just to understand what's going on and whether they have conviction in the outlook. As mentioned last week, Tim, resource stocks like these are correlated to the underlying commodity exposure, which is tin, and tin prices to date are trading at around 43,000 per tonne, which is significantly ahead of Metal X's financial year 21 realised sale price of only 27,000 per tonne. So if these prices stay elevated, and this is where you should be watching as well, we would expect the share price to remain quite strong. So now turning our attention to the corporate calendar for the week, there are no companies reporting, and also no star income stocks going ex-dividend. But during the week though, Tim, Telstra announced that its CEO, Andy Penn, is planning to retire, with CFO Vicky Brady expected to be appointed on the 1st of September. Now, we don't view this as a significant risk, given that Brady has excellent experience being a long-standing telco executive since 1997, when she moved from KPMG to Optus. Meanwhile, for trend-sensitive investors, those utilizing the SD Max, which is the Stock Doctor moving average crossover, we note that Commonwealth Bank has triggered a bullish signal on this indicator. Meanwhile, no changes were observed on the SD30 TSR, which is the Stock Doctor 20% stop loss from its highs or gains from its lows. In Under the Microscope this week, we look at star growth stock, Premier Investments. The company is well known for its popular children's brand, Smiggles, and its in-fashion clothing portfolio as well, which includes Peter Alexander and Just Jeans. The company reports out of cycle and released its first half results this week. Annualized revenues were up 13% and supported by a solid back-to-school trading period, which helped the performance of Smiggles. Positively, online sales were also robust, up 27%, and contributed to 25% of the group's performance. And this segment operates at higher margins, which also help maintain the group's net profit margin at 18%.
Yeah, I love my Peter Alexander jammies, Kien, and they're in the top drawer. They're ready to come out come cooler months here in winter, Kien. So I love Premier Investments, not only as a star stock, but also their products are pretty good. But I did notice that earnings have been revised higher by about 11% over the last 3 months, which is great. Lovely trending consensus forecast earnings there, Kien. And this seems incredible given that COVID infections in Victoria and New South Wales promoted the closure of retail stores and reduced the transparency of financial 22 earnings, Kien.
Yes, that's right, Tim. The closure makes forecasting quite tricky, hence why we're seeing significant changes to consensus earnings. The positive revision, though, has been driven by the release of its trading performance, and for the first 5 weeks of the second half, there was a 5% improvement in their store trading.
Yeah, really important thing, this one too. Dividends are paid, and they're obviously a star income stock. Dividends are paid from cash flow. So it's important for us to look at free cash flow when assessing the ability of companies to pay future dividends. For income investors, does the drop in annualized free cash flow from 238 cents per share to 188 cents per share this year cause concern for the sustainability of future dividends, Kien?
Yeah, Tim, that looks concerning, but this reduction in trend again reflects the impact of those retail store closures as a response to government mandates in Victoria and New South Wales. But we believe this trend is temporary, and we see a recovery in free cash flows, especially in financial year 23, as you can see on Stock Doctor. Furthermore, this year's free cash flow of 188 cents per share, that remains well above expected dividend payments of only around 102 cents per share. Therefore, we believe the current gross dividend yield of circa 5.3% is sustainable, Tim.
Yeah, and Premier Investments are another great case study for all of the reasons you've just mentioned, Kien, but also in the fact that Solomon Lew, the chairman, he doesn't draw a wage, and you can see that under Golden Rule 7. And as far as we can tell, Solomon has not paid himself a salary since he was appointed as chairman in 2008. So a lot of faith in his business, but I also love the fact that the way he structured things, so he is remunerated another way, but it is through skin in the game. And he does that by the fact that he is the largest shareholder and he owns circa 40% of total shares on issue through an indirect holding via Century Plaza Investments. And you can see that under the major shareholders feature within Stock Doctor. So not only are his interests well aligned with shareholders, but he also is well rewarded in cash when the company pays a dividend. So they're a high yielding stock. He's got serious skin in the game, and that's how he's rewarded. If the company does well, he does well through the distribution of dividends. Lovely case study.
The biggest event over the week was the release of the pre-election budget, which targeted two key areas, the hip pocket and national security. So it would be remiss of us not to answer this question. What star stocks will benefit from the fiscal stimulus?
Yeah, Kien. Last week, yourself and Matt alluded to, on taking stock, the potential for consumer stocks to really benefit from a one-off $250 handout to households, tax cuts on fuel, and tax offsets for small businesses. To reiterate your message, star stocks like Woolworths, Coles, Wesfarmers, Premier Investments, Breville Group, Lovisa, JB Hi-Fi, Baby Bunning, Domino's Pizza, and Collins Foods should all be beneficiaries of these types of relief.
Yes, Tim, and we've seen, sentiment improve in some of these stocks as well, and that's why we've seen a recovery in those consumer stocks over the past week.
Yeah, and other government budget initiatives have been prioritised, like road and rail infrastructure spend, Kien, defence spending, home deposit schemes, and childcare assistance for working parents. So, what other star stocks will benefit here?
Yeah, the star stocks to benefit from these thematics, Tim, include Codan, for instance, with its exposure to military communication equipment, CSR and James Hardie, due to the potential for more first home buyers, leading to increased demand for building materials. Then there's the REITs, Arena REIT and Charter Hall Social Infrastructure, with their exposure to childcare properties. Also, naturally, resource stocks like BHP, Oz Minerals, Rio Tinto, and oil gas producers like Woodside Petroleum and Beach Petroleum, they will benefit from the rise in demand for raw materials as these infrastructure and road projects get underway, Tim.
Yeah, really exciting, Kien. And it's great to see share price sentiment on some of these stocks lift on the back of the budget. But at the end of the day, we should invest in the numbers and focus on the factors that drive long term outperformance on these stocks. These include investing in financially healthy businesses. We can't emphasize that enough, especially in this environment, always for that matter, that can generate high returns on equity or invested capital, have strong profit margins, sustainable dividend yields for those income seeking investors, and of course, manageable active risks under Golden Rule 3.
Yeah, that's right, Tim. But that's all we have time for today. And thanks again for your contributions and insights.
Yeah, my pleasure, Kien, as always. I love it. But just to let members know that there was a Stock Doctor update released yesterday with some really nice enhancements in there. Longer term members will love to know that they can now chart under Golden Rule 4 and in the charting tool, Golden Rule 2, Golden Rule 3, and Golden Rule 5 criteria. Criterion like return on equity, return on assets, return on invested capital, earnings per share growth, and raw EPS forecasts, including revenue growth and PE and PEG ratios. Just jump into the Help Centre to read the latest release notes, and we guide you through exactly how to access those nice features together with a lot more. And we look forward to seeing you all on Monday morning at 10 a.m. Eastern Australia time for Lincoln Live Q&A. And I'll have a couple of special guests with me on Monday morning.
Yeah, thanks, Tim. Again, constant innovation to help our clients out there. But again, to make those numbers very clear so that they can invest with confidence and peace of mind. Take care and have a happy, healthy, and prosperous week ahead.
Have a great weekend, everyone, and go Blues.